Hey yo, what's the word with you scraggly dudes who I've coined the Chico Army? But if you're new, you're not part of the crew, you're just a viewer of the tube. My name's Tyler, and I'm the host of the crypto channel that's in your face and truly comes out of nowhere. Kind of like this drunken lass in glass. You know our smash mouth. It's time for Chico Crypto. I know, everyone wants a parabolic bull run. Day after day, Bitcoin breakouts, letting altcoins go ballistic, which I think is going to happen again. It's just going to take some time. Now, in the past 2 years, the markets have been bullish for Bitcoin. First, we had an extremely quick hype cycle, which began in January of 2019, when BTC was at a low of around 3.5K. It pushed to 13K by the end of June that year. Parabolic for Bitcoin to say the least. But here's what I find interesting about that run. It didn't spark an alt season, and actually Bitcoin dominance grew higher and higher month after month, peaking around 70% while altcoins dropped and kept dropping. So the case of this was, if you had been bag holding since 2017 altcoins, this sucked the wind right out of investors and holders even harder. They had been wrecked from the initial 2018 dump, and now when Bitcoin was bullish, a majority of them weren't pumping too, staying stagnant or dropping more. It wasn't until 6 months later, end of December 2019, that altcoins finally got some love and a mini alt season kicked off. As we can see from the dominance chart, altcoins moved from under 30% dominance to 36% by February 2020. It's the biggest upwards gain in a long freaking time, while BTC, it went on the slide. And Bitcoin wasn't going down during this time, but actually pumped from under 7K to 10K. It was leading the charge, you can say, but altcoins, they had finally found their feeding. Although this was over 2 years since the 2017 parabolic run, a long period of time to be bag holding altcoins to only see them go down. A large chunk of the investors who had joined during that hype cycle had already sold or had decided to forget about their tokens. A 20% pump wouldn't be enough to get them back in, as they were still 95% down from 2017. Although it did get a few back, but immediately the crash from BTC in March, which altcoins got wrecked again, and by May of that year, dominance of them was back to just above 30% dominance. Another major burn and not good for those eyeing the markets again. But since May, things have been friendly, and I'm talking real friendly to altcoins. They have been gaining steam month after month since, and Bitcoin once again has been sliding while the price has been going up. So, those that were burned from 2017 and beyond have been slowly but surely rejoining. Which means right now we are at a critical point. A large majority of burned investors of old are back in the markets. Not all of them, but I would say over 75%. Another major altcoin rug pull on them by the crypto whales controlling the markets would be a serious blow to their confidence in these markets. So, to those saying Bitcoin to 6K or lower again, I just don't believe it. Altcoins would get obliterated, and it would utterly destroy any chance of Bitcoin living up to the 4-year hype cycle model. So where are we in that 4-year hype cycle model in my opinion? Well, if we compare it to the last one, 2014 to 2017, we are currently in 2016. As you can see, back after the crash and Bitcoin kinda going sideways, it had a nice little hype cycle in June of that year. Isn't it ironic we had a hype cycle this year around the same time? Now looking at Google Trends interest with Bitcoin in 2016 during that mini hype cycle and after, it peaked during the price run. But by October, the beginning of the month in 2016, that interest died out right back to the lows for the year. Now let's compare that with this year, side by side. Not exactly the same, but very similar. Interest hype cycles mid-year with a deflation in interest back to lows in October. Now let's just expand out the interest in 2016 past October to just January of 2017. Interest, it starts to go parabolic. How about halfway through 2017? Kept going parabolic, and all the way through 2017 to December of that year, it just kept going. So is this going to happen again? Are we just at the interest low like in October of 2016 before the real fun begins? Well, I like to see what others are saying. And Willy Woo, the popular Bitcoin analyst and former #1 trader, dropped this tweet. He said, "We're seeing a spike in activity by new participants coming into BTC, not yet reflected in the price. It doesn't happen often. This is what traders call a divergence. In this case, it's obviously bullish." And in the chart, we can see the orange line spike, new BTC entrance, yet the price is going sideways. If you look back in the past, large majority of the time, an interest spike also meant a spike in the price. Then 2 months ago, he spouted something similar to my own thoughts. Jimmy Song tweeted, "Are we in a bull market yet?" And Willie replied, "Yes, the bull market really started April 2019. What started recently is the early main bull phase. It's Q4 2016 all over again, but different dynamics and themes at play." And that is so true. 2016 to 2017 had a spark besides Bitcoin's price flying, ICOs, and altcoins. And ERC-20s built on Ethereum allowed this to easily be done. It was a breakthrough for fundraising and a breakthrough for the retail investor to participate in company launches. So, what is that spark today? Well, once again, it comes from Ethereum. Willie said this in his August tweet too about the dynamics. ETH has reinvented itself as a platform for DeFi instead of ICOs. It's on hyperdrive with Uniswap froth. Some may say it's just another platform play for Ponzi's, but I can't discount that experimentation is an interesting gain for crypto as a whole. DeFi, it's DeFi. People are getting DeFi curious, just like ICOs in 2016. Pull out the 1-year Google interest chart for ICO. Started to really bubble towards the end of 2016. How about the 1-year chart for DeFi today? Really starting to bubble. Now expand out the ICO chart to the end of 2017. The interest in it went crazy, and the 2016 peak of it is just a blip on that chart. Will this happen with DeFi into 2021? Personally, I think so. Why? Well, decentralized finance is barely being understood, and the vast majority of those in right now are not newbies. They are investors who have been around the markets for a bit of time. Just wait until the newbie valve opens for DeFi, like it did for ICOs beginning in 2017. But DeFi in itself is a concept made up of multiple faucets. Of course there are tokens, but now there are different types. ERC-20 is still the dominant form, but now there's NFTs, ERC-721s, and the next iteration of the ERC-20, the ERC-677 created by Chainlink. Each piece and each concept of DeFi adds to the power of what it can do, and each piece can create their own mini hype cycle themselves. I'm sure you've noticed NFTs picking up recently. Looking at total trading volume for them, it's been an upwards trend and bubbling lately. Yet if you go to Google Trends for NFTs, interest isn't bubbling like DeFi. So in my opinion, room to grow there, short, mid, and long. Because NFTs are already pushing themselves into mainstream thought. Have you heard of NBA Top Shots? Well, these are NFTs created for the NBA by CryptoKitties creator Dapper Labs, which are like digital card packs. You open them and you collect players, and certain ones are rarer than others, meaning less minted NFTs. Now guess how much one just sold for? This legendary LeBron James, mint number 37 of 49. $3,800. And just before this, a rare Tyler Hero, nice name, sold for nearly $1,000. And there's 250 minted of those. So this is a market, a big one to boot. Digital cards, gaming items, and the like, which is a good onboarder for the noobs, especially when they get partnered with the likes of the NBA. But these aren't the NFTs that are going to change finance, because financial products turned NFTs will be the ones who really get the bull spark going this time around. We've recently seen insurance getting tokenized into NFTs with YInsure from Yearn. We've seen business invoices getting tokenized with Centrifuge. Financial products tokenized, in my opinion, is the creme de la creme of this run. So my focus is on the projects doing just this, and many of them aren't even conceived or built just yet. But these, when they are built, will bring in mass amounts of liquidity. Liquidity the market markets can only dream of. Although, if you go to total NFT volume from non-fungible, it's only doing recently 400k daily. A lot more than a month ago, but still not much compared with the crypto markets and tokens doing hundreds of millions to billions per day. NFTs are pretty illiquid. But you need to realize that just like tokens are their own financial asset class, NFTs are too. It took some time for tokens to get the infrastructure built, and the same case will be for NFTs. Marketplaces are currently being built, standards are being built, and the financialization of NFTs is just about to begin. Cheers, I'll see you next time.